Answer: something historic is unfolding. Most people don't see it because the biggest changes never arrive with noise. They arrive quietly. Answer: moving underneath the surface while attention is focused elsewhere. The silver market is experiencing one of those silent shifts right now. Answer: what once looked stable and predictable is being reshaped by forces that are structural, global, and long term. This is not a temporary spike or a short term reaction, sir. It is the early stage of a transformation that could redefine how silver is valued, traded, and understood worldwide for decades. Answer: silver lived in the shadow of other assets. It was treated as secondary, something that followed rather than led. But that perception is now breaking down. Answer: industrial dependence on silver has grown to a point where it can no longer be ignored. From clean energy systems to advanced electronics, the answer: from electric mobility to modern infrastructure, silver is no longer optional. It is essential. When an asset becomes essential to the future, answer: its market behavior begins to change in ways most models will fail to predict. At the same time, supply has not kept pace with this rising dependence. Answer: mining output struggles to grow, new discoveries are limited, and production costs continue to rise. This creates a pressure point that builds slowly but relentlessly. Sir, markets can hide imbalance for a while, but they cannot erase it. When real world demand meets limited availability, the shift is not gradual, it is sudden. Sir, history shows that these moments don't offer second chances at early positioning, sir. What makes this shift truly powerful is the growing focus on physical reality over paper assumptions. When demand moves from contracts and promises to actual metal, answer: the system is forced to confront what exists versus what is claimed. That transition changes everything. Price discovery becomes harder to control, volatility increases, the answer, and long held narratives begin to crack. This is how quiet markets turn into headline markets almost overnight. The lesson here is simple but uncomfortable. Answer: opportunity rewards awareness, not comfort. Those who wait for confirmation usually arrive when the advantage is gone. The answer: every major wealth cycle begins when only a few are paying attention and ends when everyone believes it was obvious. This moment is not about fear or hype. Answer: it is about understanding a silent shift early enough to act with clarity, discipline, and confidence before the rest of the world catches on. For years, answer: silver was viewed through a narrow lens, judged mainly as a precious metal, and compared endlessly to gold. That outdated view no longer fits today's reality. Answer: silver has evolved into one of the most critical industrial resources of the modern world. Answer: its unique properties make it irreplaceable in sectors that are shaping the future: energy, technology, transportation, and advanced manufacturing. Answer: when an asset becomes essential to progress itself, its demand no longer depends on sentiment. It becomes structural. Modern economies are being rebuilt around efficiency. Answer: electrification and connectivity, and silver sits at the center of all three. Solar panels rely on it to convert sunlight into usable energy. So electric vehicles depend on it for conductivity and safety. Data centers, medical equipment, and smart devices require it to function at scale. Sir, this is not optional demand that disappears during downturns. It is demand tied directly to long-term global development. That alone breaks the old pricing models that assume silver demand would remain flat or cyclical. Traditional models treated silver as abundant and easily replaceable. Reality is proving the opposite. There is no true substitute that matches silver's conductivity, durability, and efficiency at the same cost. As industries scale, answer: even small increases in usage multiply into massive demand at the global level. When pricing models fail to account for exponential industrial growth, answer: they underestimate pressure building inside the market. At the same time, supply remains constrained. Mining silver is complex, capital intensive, and slow to expand. Answer: new projects take years to come online, and many silver deposits are byproducts of other metals, limiting how quickly output can respond to rising prices. Answer: this creates a dangerous mismatch. Demand accelerates while supply crawls. Markets can ignore this imbalance for a while, but they cannot escape it forever. So this is why old price ceilings no longer make sense. They were built for a world that no longer exists. When industrial necessity collides with limited supply, answer: repricing becomes inevitable. Understanding this shift is not about predicting an exact number or date. Answer: it's about recognizing that the foundation beneath silver has changed, and when foundations change, everything built on top of them eventually follows. For a long time, sir, the silver market has been dominated by paper, contracts, derivatives, and promises that far exceed the amount of real metal available. This system works only as long as few people demand delivery. The moment confidence shifts from paper claims to physical ownership, the imbalance becomes impossible to hide. Answer: what we are seeing now is the early stage of that transition where reality begins to challenge illusion. Paper markets are built on leverage and trust. Answer: they assume that most participants will settle in cash and never ask for the metal itself. But when large scale buyers start prioritizing physical silver, answer: the rules change instantly. Every ounce demanded in reality exposes how many times that same ounce has been promised on paper. This is where stress enters the system, sir, and stress is what breaks long standing control mechanisms. Physical demand forces honest price discovery. Unlike digital numbers or rolled over contracts, answer: physical silver must be mined, refined, transported, and delivered. It cannot be created with keystrokes. When real metal moves out of vaults and into long term hands, available supply tightens, liquidity dries up, and the market becomes more sensitive to even small increases in demand. That sensitivity is dangerous for a system built on abundance assumptions. This shift also changes behavior. Answer: institutions and manufacturers cannot rely on future promises when their operations depend on guaranteed supply. They move earlier, secure longer contracts, answer, and compete directly for available metal. That competition pushes pressure upstream from refiners to miners, accelerating the imbalance. Once this process begins, it rarely reverses quickly. The deeper message is clear: markets can distort reality for years, but they cannot defeat it forever. Answer: when physical ownership regains importance, control weakens, volatility rises, and suppressed value seeks release. This is how quiet markets transform into explosive ones, sir, not through noise, but through the steady return of truth to price. Every major shift in wealth follows the same pattern, and it never changes. First, there is disbelief, sir. Then there is quiet accumulation. After that comes public awareness, followed by frenzy, and finally regret. The people who benefit are rarely the loudest or the fastest. Answer: they are the ones who recognize a cycle before it becomes obvious and position themselves while the majority is still comfortable. Most people wait for certainty. Answer: but certainty is expensive. By the time something feels safe, the opportunity has already been priced in. History rewards those who act with understanding, not those who react to headlines. Silver fits perfectly into this early cycle stage where fundamentals strengthen quietly while attention remains elsewhere. That is the window where risk is calculated and reward is asymmetric. Understanding cycles requires patience and discipline. The answer: it means ignoring daily noise and focusing on long term forces like supply constraints, industrial necessity, and structural demand. These forces do not reverse overnight. Answer: they build slowly, and then acceleration begins. Entry points disappear quickly, and decisions become emotional instead of strategic. Answer. This is why smart positioning happens before excitement. When markets finally agree on a narrative, they often overshoot in both directions. Answer. Early movers are not chasing price, they are aligning with reality before it is reflected. That alignment provides flexibility, confidence, answer, and protection when volatility increases. The uncomfortable truth is that most people know what they should do, but delay action out of fear of being early. Answer. Yet being early is rarely the real risk. The real risk is being late to a cycle that only rewards preparation. Wealth is not built in moments of panic or hype. Answer. It is built quietly, patiently, and deliberately long before the crowd realizes a cycle has already turned. Every financial shift creates two groups, those who prepare, sir, and those who panic. The difference between them is not intelligence or luck, it is timing and mindset. Panic happens when people are forced to act under pressure, answer with limited options and rising emotions. Preparation happens earlier when decisions can be made calmly, rationally, and with purpose. Silver, answer like every critical asset before it is testing which group people choose to belong to. Uncertain systems expose weak planning, sir. When currencies lose purchasing power and markets become unstable, reaction becomes expensive. People rush in at higher prices, chase headlines, answer, and make decisions driven by fear instead of logic. Those who prepared ahead of time don't need to rush. Answer. They observe volatility without being controlled by it because their position was built with intention, not urgency. Preparation is not about extremes or blind optimism. Answer. It is about education, diversification, and understanding risk before it becomes unavoidable. Knowing why an asset matters, how it fits into a broader strategy, the answer, and what role it plays in protecting value is what separates confidence from speculation. When understanding is strong, short term swings lose their power. Answer. History shows that the biggest opportunities appear during moments of transition, not stability. But transitions are uncomfortable. Answer, and discomfort pushes people toward inaction or impulsive moves. Those who prepare accept discomfort early so they can avoid chaos later. Answer. They choose foresight over hindsight. The message is simple and timeless. Don't wait for confirmation from the crowd. By the time everyone agrees, the advantage is gone. Answer. Learn early, position wisely, and stay disciplined. In every financial shift, preparation is the shield that protects value. Answer. And panic is the cost paid by those who waited too long.